Hello, Mad family. Welcome to the RBA monthly announcement. The interest rate has increased by 0.25%. So, how's that going to affect everyone? Well, on average, for $1 million loan over 30 years, the weekly repayments will increase by about $35. So, what I'd recommend is getting in touch with a broker or banker to find out the effects on your repayments. Double check to see what interest rate you're on. I'm finding that a lot of people that I'm speaking to, for example, we went to the home show at the convention center over the weekend. A lot of them were on a competitive interest rate because interest rates are coming to the forefront of people's minds. Now, I'm not going to bore you with refinancing. I'm sure you're well aware of it, what banks are offering at the moment and rebates. We've spoken about it in the past a lot. So, what I'm going to do is I'm going to pass across to Lachlan, who's going to talk a little bit about because of this rate increase, how is that affecting your borrowing capacity? Lachlan, tell us a little bit about how these interest rate increases are affecting borrowing capacity.
Hey, Costa. So obviously, whenever the rates go up, the rates that the banks have to assess your mortgage on goes up, which then in turn reduces your borrowing capacity. So with the current rate rises, we've seen roughly a 30% decrease in people's maximum lending. Things that you can do to try and avoid this are look for banks that fully assess your pre-approval. They may lock in your assessment rate and guarantee you that lending for at least 3 months while you're out there making your offers.
So there are some banks that lock in the amount that you can lend for at least a 3 month period. As soon as that 3 months is up, then the bank or the broker should technically reassess your borrowing capacity because whatever rate increases happened within that 3 month period, you've been secured that debt, it will change. For example, a 0.25% increase on average will drop your borrowing capacity by about 2.5%. So definitely relook at getting your pre-approved, reassessed, or renewed. So conversely, interest rates are increasing, which is ultimately affecting borrowing capacity, which then affects property value. So coming over to Jack, tell us a little bit about what's happening in the property market.
Yeah, it's quite interesting. At the moment, we're seeing that there's a little bit of an adjustment happening. Now, we saw that phenomenal growth of about 32%, obviously during COVID. So, because of that massive boom, there's a little bit of a retraction at the moment of about 7%, but that's on core logic. So, we're not quite sure how that's impacting people individually, but that's what the market as a whole is doing at the moment.
So the good thing is, I guess, is that if you are an existing property owner, you might have been able to enjoy that property growth over the last few years. Now, what I'm finding is people who are jumping into the property market and purchasing their first property, they are hopefully buying it at a more reasonable price or an adjusted amount.
And also, I'm seeing on realestate.com, for an example, I saw a property originally listed for offers over 950 and it's been brought down to 899. So it's I'm seeing a little bit of an adjustment, I suppose. The buyer has a little bit more power at the moment, so a longer finance clause, a longer settlement clause if they are selling their existing property and not having to do bridging loans and things like that. There's a little bit more flexibility.
I am finding that clients who are trying to buy subject to the sale, if you try to do that during the COVID period, there was no chance that that was going to be accepted. But now we've got a few clients that are actually buying subject to and sellers are accepting it. Now, it's not all sunshine and rainbows for everyone. Interest rates are still increasing. So people are looking to see what they can do to lessen the blow, I guess, when it comes to these rising interest rates. So we're going to take a walk over to Matt Prentice, our financial planner, and see what he has to say about helping people to overcome these challenging times ahead. Prentice from Mad Life, the financial planning team. Matt, tell us about what Australians are doing to lessen the blow from these rising interest rates.
Big trend at the moment. People are actually talking about their cash flow, making a priority of setting aside savings and trying to build savings, getting back to the basics. So, last 12 months, probably talking about holidays, building investments, etc. Now it's a bit more survival. How are we looking financially? Are we okay? Are we not? What do we need to do? Big trend at the moment is cash flow.
Beautiful. So, are there any actionable tips clients can do to sort of help with this, with these changes?
Yes, I think one of the big things that we want to do, being conservative for the next 12 months, knowing there's more rate rises coming, trying to pretend like it's already happened. Okay, prepare for a 6% rate. Okay, let's make sure we're affording that now and not reacting every time it changes month on month. That's a big tip that we're trying to get people to do at the moment, which is coming across quite well, just to try and get through this 12 months.
Yeah, beautiful. Well, that's actually, yeah, definitely something we've been talking about with our clients. Even if your fixed rate is expiring in 6 months' time and you're on that beautiful 1.99%, don't wait until that happens. Start making the adjustments from now, start budgeting from now. In summary, talk to your professionals around you, talk to your accountant, your financial planner, your mortgage broker. Don't wait, take action now. My name is Costa. Thank you for listening for the March RBA announcement. Have a mad day.